AMC stock is now trading in deep effing value territory. We need to go over what B. Riley Securities just said about AMC and break down some of the fundamental numbers behind this stock. I hope you are ready for this video. This should be exciting and or encouraging and should bring you a little bit sense of equilibrium at the very least, as AMC stock has been selling off, right now presents a very keen opportunity. Hit the like button, subscribe to the channel, and source your comments, questions, or concerns down below in the comment section, guys. So, deep effing value. That is Roaring Kitty, the guy that started the whole trade, the whole meme universe, right? That's where AMC is at right now. So, let's get into some of the numbers B. Riley Securities just put out for Q3 earnings at AMC. And B. Riley Securities just actually cut their Q3 2023 earnings estimates for AMC Entertainment in a note issued to investors on Tuesday. B. Riley Securities analyst Eric Wold now expects the company will earn 63 cents per share for the quarter, down from their prior estimate of 60 cents. Wait, 63 cents per share of profits of EPS. Whoa, okay here. AMC Entertainment's current full year earnings is $2.47 a share. Okay, so AMC could come in $3.50 or higher of EPS for this year. So let's go ahead and do a little bit of math here. AMC stock is trading at $7.20 per share. Divide that by $3.50 if AMC comes in with a full year 2023 EPS of $3.50. That would be a PE ratio of literally 2. That is what you would call deep effing value. If you look at AMC's revenue estimates as well for this earnings, well, we're expecting revenue alone of about $1.25 billion. AMC's market cap is less than that. So AMC's price to sales ratio, even deeper effing value. I mean, we could do those estimates for you as well. Consider it $5 billion, give or take, for 2023. Divide that by AMC's current market cap of $1.7 billion. Oh, I did that totally wrong. 5 billion divided by 1.17 billion. And you're looking at a price to sales ratio of, did I do that backwards? No, that looks right. Of, that would be a price to sales ratio of about a quarter of 1. So anything that's under 1 for a price to sales is typically pretty dang good. Okay, it tends to be more in line with fair value. So really, AMC stock could be 3 times higher and still be considered fair value. And I do think that's why your average analyst price targets on AMC stock are sitting around $22 per share. I think that's why Eric Wold has a $45 price target on AMC stock. Because if you look at these P ratios, you look at price to sales ratios, a PE at 2? Huh? The S&P's at 19? 20 in that range, just to get in line with where the markets are. AMC stock would need to 10x its PE, 10x its share price. That's insane. That's what I would call deep effing value at its finest. AMC stock is no longer an expensive company. It is now a very, very cheap company. And even if you look at AMC as far as the charts are concerned, the stock is now lower than where you were during the run-up in January. So this would be equivalent to buying AMC stock before the January run-up when everyone thought AMC was going bankrupt. Sure, you're getting some dilution. Obviously, that's true. And this is downside momentum on AMC stock and the share price. But, I mean, to this degree, this represents an incredible potential opportunity, especially with a lot of your options. I think personally, longer dated options look very attractive here because AMC stock, just to get back to a fair value, could dramatically increase, right? Just to get to a fair value again. AMC stock is far under a fair valuation. And this is, I think, because we've seen a lot of shorting activity. And I do think the next exchange reported short interest number is going to be extremely high. Let's take a look at when we should get the next exchange reported short interest number. So, they normally come out on September 9th or September 12th, whenever the markets are open. Today is September 9th. Markets are closed, so we're not getting an exchange reported short interest number today. So we should get that this week. On Tuesday, maybe even on Monday, but probably on Tuesday. And this is probably going to show a huge increase in AMC short interest. How could it not? On August 15th, the short interest of free float was 29.24%. And today, the stock has dropped dramatically compared to where it was August 15th. August 15th, AMC stock was around $33 per share. Now it's $7. The short interest could be over 100%. And when you couple this with the deep effing value that AMC is in right now, that could be a very explosive recipe for disaster for the hedge funds institutions that are short in AMC. Now, there's some interesting seasonal trends that are at play right now, including September. Right? So next week on Wednesday, we're going to get the CPI report. The expectations for CPI are off the charts. So you're expecting month-over-month headline inflation at 0.6%. Last month's reading was 0.2%. 0.6% on a 12-month annualized basis is over 6% inflation. That's insane. I think that is far too high of an estimate. I think we're going to beat those estimates and the markets can actually rally off of that. Now, normally markets rally into a quad witching in the month of September. Quad witching happens 4 times a year. It is when stock index futures expire, stock options expire, index futures and index options all expire on the same day. It happens 4 times a year, and I believe it's March, June, September, and December, I want to say. 4 times a year. And typically in the month of September, as you can see from this chart, you tend to get a rally during this, what will be this upcoming week. Right? Specifically September 13th, you tend to really rally after that date. And that is coincidentally the date we get CPI. But then towards the end of the month, you start to get into a little bit more of a shaky market. And I do think there is one big problem that I have with the markets right now. The GDP expectations for Q3 is 5.6% from the Atlanta Fed GDP Now tracker. Your analyst expectation is about 2.5%. Your lowest estimate from analyst is 1%. Your highest estimate is about 3.5%. So how this really works is based off of consumer data and retail spending. So we've seen some good data here recently. If that continues, well, the estimates are going to stay high. But we don't have the next GDP report until October 26th, about 2 months from now. So we're going to get a lot of data on the consumer. And if consumer data starts to look down and it starts to look negative, well, all of a sudden the markets are going to say, hey, maybe our GDP estimates are way too high, and that's where you come into a bit of a problem for the markets. Now, Thursday, you're going to get retail sales month over month. This will directly impact GDP forecasts more than anything else. it's no surprise why people are expecting super high GDP for Q3. Last month's retail sales numbers came in at 0.7%. The month before that was also strong. But for the month of August, you're expecting 0.2%, so closer to negative. If this were to go negative, you're going to all of a sudden have fears and people talking about a possible recession. And that's the farthest thing off of most people's radar right now. So I think it's all based on expectations. If the expectations were already low for GDP, I would be quite bullish on the next couple of weeks in the markets. That's just the simple fact of the matter. But GDP estimates are way up here. My estimates are way down here. That's a lot of compression of potential a gap here. I don't think the estimates go higher for GDP from here. They're already high. I think, if anything, the estimates will start to go lower, and that's what could cause the markets to fall. This could either have a very positive effect to AMC. It could also have a very negative effect to AMC. So that is something you guys need to be watching closely. If you guys want to come watch this closely and come trade with me live in real time every time I make trades, link down below in the description of this video. But next week, we're going to have a lot of data across the board. Most importantly, again, for the broader markets, is retail sales data and overall consumer data, including the Friday report that we get for the Michigan Consumer Sentiment Survey. This is going to be a big event as well. And there's a lot of other data points mixed in here and there. We're not going to break them all down here in this video because I don't want to make a 35-minute long video for you. We'll talk about that probably tomorrow. We'll go deep into my expectations. Now, let's talk a little bit more about AMC stock. I know I keep talking about this big bounce. Hopefully, this puts it into a little bit more context on why you're in deep effing value and why it's logical to see a bounce pretty sharply, probably over your average analyst targets, which are $21+. That would be an increase from here of, just to get to the average analyst price target, of about 202%. So we're talking a very big bounce here. We're not talking a 20, 30, 40, 50% bounce. We're talking about a multi-100% bounce that could be coming on the near-term horizon. Now, if we look at some of the data here on Ortex, you have a short score of 66, 145.14 million worth of short positions in AMC, 11.33% short interest of free flow out on loan at 16.26%, shares out on loan 25.65 million, days to cover 2.77, cost to borrow 7.89%, and utilization of 77.29%. If you take a look at some of the cost to borrow fees, I don't know if these are true or not, but we run through the data because we have for years now. Just keep in mind, all of this data is basically incorrect. Interactive Brokers has cost to borrow fees of about 4.24%. Cost to borrow average of 6.5% as per Ortex. Ortex's estimates for the cost to borrow max at 14.39%. Cost to borrow minimum 2.32%. So some very low numbers that you are seeing here. And I think after the short interest report comes out and people are like, wow, we're 40, 50, 60, 70, 80, 90, 100% short, cost to borrow fees likely are going to rise quite a bit. We do still have a lot of FTDs, millions that need to still be covered out. On the last account as of Friday, we had about 4.1 million FTDs that did need to be closed out. Now this works on a T+35 settlement time, so it's going to take a little while for these to eke their way out and to actually get covered on. And this is anti-dilutive, so right now we're getting a lot of dilution effects from AMC right now, obviously raising shares, raising capital, but that will soon come to an end, hopefully, and the FTDs have an anti-dilutive effect. So there's 4 million shares roughly that are still out there in AMC's float that should not be out there, that are actively getting bought back, hopefully pretty soon. Now, this upcoming week is going to be a big one as far as option activity as well. You have 45,000 calls in the money, 132,000 calls out the money, 141,000 puts in the money, and 448,000 puts that are out the money. So there's a lot of dry powder, if you will, that are in these options that could move this stock quite a bit heading into quad witching, which is again this Friday. So let me know what you think about all of this information down below in the comment section. Hit the like button, subscribe to the channel, and source your comments, questions, or concerns down below in the comment section. You guys have a great rest of your day, and I will see you in the next one.